What is going on, guys? Common Forex, the Max one here. I know it's been a while since I actually came on YouTube and delivered another amazing content for you guys, and I'm really sorry it's been a while. I actually took a short vacation for about 4 weeks. I'm hoping my previous content held you guys down while I was away, but now I'm back, and you know how we used to do it before I left. Back-to-back contents on YouTube. More amazing educational videos are here for you to help improve and solidify your trading game and then your edge as a forex trader. In today's video, I'll be taking you through a simple trading technique I use that allows you to be able to catch reversals even when the market hasn't gotten to my support or my resistance zone. The main reversal strategy a lot of forex traders use is the support and resistance, demand and supply, or however you may want to call it, where traders are looking to catch main reversals at highs or main reversals at lows. But with this particular strategy, I'm able to even catch a reversal when the market fails to get to my resistance or my support zone, meaning that there might be a reversal halfway, there might be a reversal 3/4 of the way, and I'm able to still find an entry and then catch a trade and then make some money for myself, be it a swing move or a day trading move. And I know you guys cannot wait for me to deliver this valuable content as I always do. If you're new here, make sure you subscribe to the channel. Also make sure you like this video, share with as many traders as possible. We'll be right back. Like I said in the intro, there are so many instances where the market fails to get to your resistance or your support zone. In the case for most traders, when we wake up in the morning, we actually mark out our resistance zone and then we mark out our support, and we wait to see if the market will actually tap into any of those two zones. Then we find trade entries for ourselves and then make some money and then continue with our day. Be that as it may, there are so many instances where the market fails to get to that particular resistance or support level, but it still ends up reversing. Did you know that it's actually a tool you can use to catch a trade even when the market fails to get to your main reversal points? This tool is what I call Fibonacci. So Fibonacci is actually a tool which was developed by an Italian mathematician that helps traders catch retracements. So it's simply a tool I use to catch the depth of a retracement or pullback of a move, be it a swing move or a day trading move. We are not talking about a complete reversal. A complete reversal means the market has actually gone back to where it started from. But when we talk of a retracement, it means that the market moves from 0 to 100 and it reverses from 100 to 70. That's a retracement. But if it moves from 0 to 100 and then it reverses all the way from 100 to 0, that's what we mean by a complete reversal. So without wasting my time, let me take into the charts and then explain this in detail to you guys. Like I said, it's for a move. So the move can either be a bullish move or a bearish move. In the intro, like I said about resistance and support, we have what we call a complete reversal and then we have a retracement. If we say a complete reversal, it means that the move started from here to here. A complete reversal means that it came back down to where it started from. A complete reversal in the case of a bearish move also means that it came back to the starting point of that particular bearish move. So if you look at this, what does this mean when we talk of resistance and support? It means that if it comes back to this particular level or it comes back to tap into this particular zone you see here, comes back to tap into this particular zone you see here, you are looking for a reversal trade in case it gives you any sort of confirmation, or if you have any other confluence you use to catch this trade, you simply just take your trade using that particular confluence. It means that in this case you are looking for another sell. In this case you are looking for another buy as well. This is what it simply means. But like I said, there are so many scenarios where the market fails to respect your key supports and resistance zones, as you can see clearly here. So now if you look at this, it means that in this case, we can easily have what we call a retracement. A retracement means that it actually does not come all the way back down, or a pullback. It's just a percentage point reversal. So you can either reverse to a point here, a point here, a point here, anywhere, but it doesn't come back down here. So a point here, then it goes back up. This is what we call a pullback and then a continuation. A point here and then it goes back down. This is what we call a pullback, a retracement, and then a continuation. So Fibonacci is how we are able to catch the trades here. How you are able to catch a trade even when the market fails to come to your support, even when it fails to come to your resistance, is with Fibonacci. That's how you're able to catch those other trades as well. If you fail to find an entry here, or if the market takes you out here, you still have your support and your resistance down here to take another buy from, to take another sell from. Also, you can also take a trade with your breakouts. All the various chart patterns and then trading techniques I've taught you are all applicable. That's what makes you a solid trader. If you're able to maneuver your way through any trading scenarios on the market, it makes it very easy for you. So now let me go back and then teach you how this Fibonacci instrument or how this Fibonacci tool came about. Now let's label this move here as well. Let's make the point at the bottom here 100 and then the point at the top 0. Let's do the same for the bearish move as well. And then let's also see to labeling the main move up there to make it easy and then not confusing to anyone. So we have a bullish move here. We have a bearish move as well here. If anything is confusing, just stay with me. Everything will make sense in the end. I'm trying to break it down and then simplify it and then make it as elementary as possible for everyone here. So what we do next is we now segment the move. This is the whole move. Here is 100, here is 0. Half of it is what? 50. So now we simply just need to place a line here, labeling this point as 50. And then we do the same for the bearish move as well. We label this point as well as what? 50. Then we further divide. So 3/4 of that is what we call what? 75%. So that's a 75% of the move. And then 1/4 of that, or 1/4 of that, is the 25%. Then we have our 0 here, the 100 here as well. We come here, then we do the same for the bearish move. 0, we mark out our 0, we mark out the 100. Like I said, this here I'm simply just explaining to you how those tools came about, or those levels came about. So just stay with me and then everything will make much more sense to you. So once we're able to mark them out, we now simply would just label them. So here, if we have 0 up there, this is our 25%. This is 50%. Same thing, we have our 75% here. We have our 50% here. And then we have our 25% here. What this simply means here is that you can have instances where the market will come here, go up, come here, go up, or come here and then go up. It means that with Fibonacci, you are trying to catch what another buy here to the upside. Same thing also applies for the bearish move as well. If the market travels and then gets all the way down here, you are now saying it will either be here and then go down. It will either reverse here or it will reverse here and then go back down. So in this case, the main levels I actually use, which I enjoy using a lot because they have the most repetitive nature, is the 50%, the 61.8%, and then the 78.6%. These are my main Fibonacci levels because they have the most repetitive nature. It means the market is very, very likely to repeat itself anytime it touches these levels. It ends up going back to continue the prior move again. So now all I do next is what? Identify these percentages in my move over here. So what do? It means that I have my 50% here already. Where do I have my 61.8? Obviously my 61.8 will be somewhere here. So I mark out my 61.8 and then I simply just mark out my 78.6 as well, which will also be somewhere here. So I place my 78.6% here. Then I just remove the other levels because I don't need them anymore. So the most important levels I have here are these ones. So now what do? I simply just identify my 61.8 and then my 78.6. So I have my 61.8% there and then my 78.6% as well here. So these are my main levels. I come to the bearish move, I do the same exact thing for my bearish move as well. So 78.6 here, 61.8 as well here. This is where I know my 78.6% will be. And then this is where I know my 61.8% will be. What do I do next? I simply just erase the rest because they are no longer relevant for my trading. It means that the market is likely to reverse in any of these levels. It means that now the move can end up here, reverse here, reverse here, or reverse here. So we can have the market looking this way. It means that any of these levels can be your main, level to find a trade. So it can also be the 61.8 and then it can also be the 50%. So you can see here clearly that you're either expecting the market to reverse, to rise, pull back, end up on the 50% and go back up, pull back, end up on the 61.8% and go back up, or end up on the 78.6% and then go back up. This is what we simply mean by Fibonacci. So I started from the beginning to enable you guys understand how we come by those levels. So these are my main levels. For the bearish move as well, same exact scenario. Ends up on 0, pulls back up. It means that it can either be here and it goes back to give you a sell, here comes down to give you a sell, or here comes down to give you a sell. So if it gets all the way here, is what we mean by what a complete reversal or your resistance. It means that if it comes here, you can now catch what another sell with your resistance. But we are talking about the Fibonacci, so it means that we are simply now paying attention to the main retracement levels in there. So now it can either be the 78.6, it can either be what the 61.8, go back down, or the 50%, and then it goes back down. I'm sure at this point, every single person here understands what we mean by Fibonacci and then how I actually have my main levels on here. So everything has been summarized with this simple diagram we have here. 50%, 61.8, and then the 78.6%. It means that if the market rises and it starts pulling back, if I'm trying to use my Fibonacci, I'm trying to catch a trade here, here, or here. If it drops and it starts pulling back, and I'm trying to use my Fibonacci because I might not expect it to get all the way up here, I'm trying to catch my sell either here, here, or here. So all you do next is how I always do it. You're either looking for your consolidation in that particular kill zone, or the main thing I also always want to see before I take a trade, my candlestick confirmation in this particular kill zone. So you can see clearly, this is what we mean by Fibonacci. Every single level I actually enjoy using is here. So now let's just go back to the charts and then let me take you through an example of a trade I took yesterday, because you know how we always do it here. If I don't take a trade with it, I can't teach you. So I need to actually take a trade with it and then make it much more practical for you to understand my rationale behind taking all those trades. The next thing I want to do for you guys is how to draw your Fibonacci. So if you come to your trading view, the left side of the plane where you have your drawing instruments, the third icon, you see a small arrow beside it. You have Jan and Fibonacci tools. Once you click on that, make sure you just tick on favorite tracement, just add them to your favorites. So you can see clearly, I already have them in my favorites. So you can see them in my drawing tools on this plane up here. So all I need to do is what? Click on favorite tracement. If it's a move to the upside, it means that I simply just start what? From the down, meaning that it's a bullish move to the top. And then if it's a bearish move as well, what does it mean? From top to what? Bottom. So bearish move, top to bottom. So you can see clearly my main levels. You can see my 78.6, my 61.8, and then my 50%. If you want to have the same settings as I do, I'll just click on it briefly. So you just come here and just take a snapshot and then make sure you have the same settings. So I'll just come to style. So you can see clearly my main levels are all here. Just take a snapshot briefly of it. I'll give you just a second so you can take a snapshot of it. So you can have the same levels. You can give it whatever color you want. You can do whatever settings you want. Then let me come and do the same for the bearish move as well. I come to my Fibonacci, come to the settings, then make sure you also take pictures of it. To just take a snapshot briefly. So I'm going to give you a second so you can take a snapshot before I move on to the next. So now I think we've done that. So what we need to do next is now go to the chart. And then I give you an empirical example of a trade I took with this trading tool. So now let's go back to this CAD JPY setup we have here. I'm running in almost 100 pips profit on this particular trade. You can see the screenshot on your screens. So all we need to do next is to look for what's the move. One more thing I want you guys to understand is plot your Fibonacci when you see at least a 25% pullback or a retracement. It means that if the move is from here to here, any pullback which is at least around this level, I'm plotting my Fibonacci to see if it will tap into any of my key levels, then I can take my trade with it. If you look at this particular move here, the whole move starts from here. It's a bullish move, so it means that the move is from here, my zero is up here. So always make sure when you start, your 100 falls at where the move starts from, your zero ends up where the move also ends up. So now all I need to do next is to now just wait for the Fibonacci to tap into any of my key levels, and now just wait for my confirmation. So as you can see clearly, it first tapped on what, the 61.8, it tried giving a confirmation and it started consolidation, giving some sort of bearish confirmation. So now you can see it's on my 61.8. I want to have a confirmation before I take this particular trade. So now I just wait for the next candle. As we always say, once you plot your levels, just wait for the next candle. At the same time, I don't need to mark out any resistance and then support here because the market is what? There's a line on my 0%. So I know the 0% is obviously my resistance. And I also know what my 100% is what? Obviously my support. If it breaks through and gets, I'm looking for a buy here. If it breaks through and gets here, I'm looking for what? A sell. I have my 0%, 100% here. Now I'm waiting to see how my Fibonacci what plays out. So you can see the candle runs through the 61.8%. It's still consolidating along that level. You have a small candle play out there. Another candle drops, goes back up. So this you see here is where I got my confirmation for this trade. So I had a nice morning star happen here, which ended up what being my confirmation for this trade. So my entry price taking a long position with my risk to reward entry price here, and you know what I do with my stop loss. And stop loss is always what at the bottom of my consolidation. So at the bottom of the wicks there I have my stop loss, and I'm trying to see if the market will travel all the way up to this particular level we have here, which is what my main take profit. It means that main take profit up there makes it what a swing trade for me. But realistically, as I always tell every trader, if I raise any amount of pips as my stop loss, at least my TP1 is that same number of pips. And then I just look at the structure of the market to set what my various, either my TP2 or whatever I want to set. I look at the structure of the market to do that. Also, long term, you can look here and clearly say that what long term you are expecting the market to do here. It means that you're looking at these extensions to see how further the market is going to travel. So this one makes it a swing trade, but as a day trading move, at least within after this zone, I'm done with my day trading position. I bring my stops to entry and just hold my trades as much as possible. Our initial candle gives us 23 pips. Let's see how far it took us. Like I said, I'm currently running in almost 100 pips. So you see a strong candle now moves all the way up here, so over 100 pips. We had a slight pullback on it, another consolidation, and then we saw a further push on it early this morning. So currently this is where the market is. We've actually smashed both TP1 and then TP2. So how many pips have we covered on this particular trade already? From down here all the way to the top of the wick there, we've actually covered over 120 pips, as you can see clearly. So this trade was actually taken with Fibonacci. So I'm sure so many people here have heard of Fibonacci. The name sounds very complicated and foreign to you. Sometimes it might be difficult for you to understand what the concept means. This is what we simply mean when we talk about Fibonacci, and then how to take advantage of it to take trades and then make some money for yourself, because the market might not always reverse at your support and your resistance level. You might not always get to your support and your resistance level. So if you find this video extremely helpful as my other videos, make sure you like this video. It's extremely important you like this video. Also make sure you subscribe to this channel, share with as many traders as possible. Also click on the link in my description to sign up with my recommended broker with the tightest spreads, the best trading conditions for you. Also click on the link in my description to join my Telegram community, the Common Forex Trading Community, with over 12,000 active traders, where I share trading insights and then trading signals on a daily basis. Like I said, I'm back with more amazing and educative trading content for you guys. So stay with me on your trading journey, and then trust me, it will be an amazing experience for you as a forex trader, whether you are new or old to this craft. As always, thank you for tuning in today. See you in the next one. Peace out.